Good morning, all. Ira Epstein with your Morning Flash Update, and this update is for the morning as we're sitting here now on November 3rd, Friday, 2013, 8:15 a.m. Central Time. So we just had the jobs data. I'll get to it in a minute, but maybe we look at the market. The market loves the number. The number did not meet the expectations. Down. That's what the market wants to see. Labor participation slipping a little bit. Wage growth, about where it's been. What about unemployment? Up just a fraction. These are the numbers the market wants. With that, the dollar nosedives. Bonds and notes soar to the upside, so interest rates continuing to fall. Those people that were betting now we're going from 5% to 6% are under serious water right now. The market has come back on them almost, probably near half a point. That's a lot in case you're interested. And that will be friendly, the metals initially, because the dollar headwind is disappearing. Now you might say, but what about the inflation headwind? Let's do one thing at a time. That's taking the dollar out of play. And is this signaling that the dollar might be going back to the 100 level, and you might be going back in the euro, 109, 110, very possible. When we look at the flatness here in the energies, I can see that. Why? Well, so far we haven't seen anything new happening in Israel at this point in terms of, we know that Antony Blinken is there trying to initiate a pause for humanitarian rights, not a long one, a short one, to bring in food, water, and medicine. I have my doubts about energy. We'll see. Because at the end of the day, who controls the region still? It's Hamas. How do you guarantee that energy won't be used for the network of the tunnels, air machines, and everything they have to require there? I don't think you can. So knowing that, I think Mr. Blinken has a rough road to hoe. Grain market's getting a little bit of a bid today. Now, we come to the numbers. 150,000 jobs. That's well under the 170 that was estimated. I saw 180 numbers, but I did see numbers as low as the 150, so it's not a big outlier. It was in the range. The unemployment rate up a tenth. They revised down the 336 number in September to 297. I don't know that it'll get revised again, but if you take a look at all the revisions recently, about the past 3 months, probably 100,000 jobs overall. The September unemployment rate unchanged. Private sector payrolls were up 99,000. They expected them. I don't know if that was flat or not. They had 0.0 on the expectation. I just copied that. I have my doubts. Probably some gain. Government payrolls up 51,000. The participation rate wobbling here at 62.70. And as you can see, the earnings not really going anywhere. Okay. Next up, we're going to get the service sector PMI and the service sector indices. Okay, they come out at 8:45, 9 o'clock, and then we get a series of Fed members. I think there's 4 of them all told today speaking. So you take a look at all that. This is what you've got. Obviously, so far, my telling you on the S&P that the seasonals, typically the seasonal study says buy on the 26th of October. You know the date, as my subscribers get it. I don't mention it here to come out, and it's a heck of a trade so far. Doesn't mean it'll be there when the liquidation date comes, but what a run. Number 2, the ideas that I had for you on the stock indices, if you go back to my report at the beginning of September, a big down for September turned out. A violent trade in October, and then a move up maybe culminating in that Santa Claus rally. This is not the Santa Claus rally, friends. The Santa Claus rally comes right at the end of December. So right now, this is showing that the month of November is typically one of the best gaining months of the year for stocks, followed by December. Keep that in the back of your mind. Now, there's a pattern here that keeps showing itself on the charts that I'm using over and over. I saw it happen just yesterday in the hog market. I've seen it now happen in a couple of the others, especially the currencies, where it said, the pattern of the move is over. Now, what do I mean by the word over? Let me explain what I'm talking about here and get to it. Here it is, right there. It's an outside day. You see them on your charts all the time. It's when you take out the previous day's high and low, and you either close higher or lower. It's an outside day up or not. Is it a continuation pattern or the end of a trade pattern? That's what happens. And there's a very common event that happens with it when you get an outside day, let's say down, and you take out that day's high. I teach this. You get an outside day up and you take out that day's low. I teach it. It's all done in a video series. And it includes 14-day trial to my complete research of futures and spiders and ETFs. You get the charting software with it in addition, so you can see what I'm seeing. For those of you that use TradeView, this is the suite that we put in there. But the course is so cool. It teaches you what to look for, and once you see it, you go, whoa, take a look at that. That's pretty interesting. Here's what Ira said that often means. Go to iraepstein.com under the word education. You can move your cursor up here as well. It'll take you right there. Take a look at it. Add this to your trading arsenal. I'm Ira. You will not see me live Monday, Tuesday, Wednesday, or Thursday of next week. I don't know if I'll put these out remotely where I'm not in them and I just do a little talking. I will certainly be back, though, with you on Friday. This is my couple of days off, and I'll be here all through Christmas, New Year's, and so on. So now that these big reports are out of the way, I scheduled that I can get a few days off. And if you know my work day, I start at 3, 4 in the morning, and I quit at 8 at night. It's a long day. I need a break. I will talk to you all. And by the way, for my full subscribers, I intend on putting out all the updates while I'm away. So you will get those. I'm Ira. You take care.